Welcome to my weekly market roundup, 3rd April 2021. I am Sagar Nandi, retired IT professional, swing trading stocks using Q systems and techniques that I developed. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website sagarnandi.com, YouTube channel Trading Profitably, and Twitter page handle Sagar Nandi. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. I use the Q systems for my trading and I will use the same systems today. They run on TradeStation and Metastock underlying platforms. That was the last slide of the presentation. Let's continue with the live system. As usual, we start with a look at the global markets. For global markets analysis, I am using Q Global running on Metastock. In the weekly chart on the left hand side, AXJO Australian Market Index is moving inside a range. In the daily chart also, price is bound by trendline resistance and support, moving inside a range. This is continuing for quite a while. And that is what I am sharing in successive YouTube live sessions. My view remains the same. Unless AXJO breaks out of the sideways range, there is no low risk swing trading opportunity here. Let's look at the Japanese market index topics. In the daily chart, topics is also moving inside the range, triangle pattern. Unless it moves out of the range, again we will refrain from taking directional swing trades. Next, China market CSI 300 index. In the weekly, after displaying the bearish headwind, price fell, and when price dropped here, came to the trendline resistance. You may remember in that YouTube live session I mentioned that it was likely price would stop there. On this week, price tried to come down but closed with a long lower tail candle, hollow body. It also displayed an indecision dot at the candle. That was also showing that price was likely to hold the trendline support and go up from there, and that came true this week. That means using Q technique, looking at the daily chart, one could look for buying opportunities at the swing lows. In Q techniques, there are multiple trade setups, but all of them are relying on buying swing lows. When the market index itself is making a swing low, those are optimal times to look for Q trade setups in individual stocks. If we followed that approach at these 2 points, then you would have profitable swing trades on the long side. Now price has gone up little bit from the swing low. It is still bullish. both in the daily chart and weekly chart, you may continue to look for buying opportunities, but obviously the best buying opportunities would have come when the market index itself started to go up from the lows. Let's look at FTSE index, UK market. Like the Australia market, FTSE index is also moving sideways. As shared in the last webinar also, price is supported by trendline support and watermark resistance. We are going to wait to see which way it breaks out before taking directional swing trades. Lastly, India's Nifty 50 index, that used to be the strongest of the global markets. And as I shared in the last webinar also, it is now starting to move sideways. Over longer term, it is continuing to be the strongest, holding on to the price gain at the top, but in daily chart, it is moving sideways. In this case, the sideways range is quite big. When the sideways range is so big, then the buying opportunities come at the lower points and shorting opportunities come at the upper edge. Right now, price is in the middle of the wide sideways range. There is no low risk buying opportunity at this point. When was the last buying opportunity in India market? When this candle happened, that was an indecisive candle in shape, and also it displayed the indecision at the bottom golden dot. Price came down before that, came to the low of a previous candle, created a double bottom and started to go up. It created an indecisive shape candle, so Nifty 50 itself didn't have a buy setup. But as I explained, when such a pattern happens, a swing low at a double bottom, and in this case we had an indecision candle. In fact, we also had a bull release signal. You could start to look for buying opportunities in individual stocks, and those stocks would have gone up by the last candle on this chart, and you would have, I'm pretty certain, covered the risk distance by now in fundamentally strong stocks. That's how in Q technique we try to buy at swing low in individual stocks, and also we like to buy when the market index itself is making a swing low. I wouldn't like to buy now because now it is right in the middle of the sideways range. Some of the global markets are moving sideways, that is Australia, UK and India. Chinese market dropped sharply and stabilizing at trendline support. Japanese market is the most bullish, but it also doesn't have any buying opportunity right now. What about the USA market? Let's analyze the USA market using ETFs, and for that I will use Q Elite running on TradeStation. Let's start with S&P 500 is in ETF SPY first. In the last webinar that I had, that was during the weekend. I didn't have any webinar on Wednesday because I was traveling. My last webinar was during the previous weekend, Friday after market close, and in that session I clearly mentioned that it was very likely price was going to go up and make a new all-time high. And I made that, cannot say prediction, I made that higher probability move analysis based on complete Q analysis. I looked at various angles and everything was telling that it was more likely price was going to go up. in spite of the fact some other people might have thought price was going to roll over from there. It indeed made a new all-time high. Again, where would be the buying opportunity? We could start to look at individual stock buying opportunities right when price made a swing low on market ETF. Now it has already gone up for a few days. The best buying opportunities may not be there, at least not in the instruments that are moving in sync with the market. There are other instruments that were not moving in sync with the market and they may give buying opportunities now. How to find them? The There are multiple ways. We could of course find them from bottom-up analysis using Q Finder first or Q Radar that looks for technical buy setups, or as many people prefer, and which is also one of my favorite workflows, I could start with a top-down analysis, see which industries are strengthening now or accelerating now, and drill down from there and look for buy setups. We'll look at some of those buying opportunities later today. Let's look at the other market ETFs. QQQ. This has also started to go up. It is not near the previous all-time high, but it is starting to go up. On Thursday, that was the last trading day of the week. Friday was market holiday in the USA. On Thursday, it had a gap up open and closed with a bullish shape candle. The weekly candle is also bullish, both in shape and color. So if I have to guess where the market will go from here, I have to say it is bullish. Is it little bit late to take buying opportunities? Yes, because it has already gone up for a number of days from the swing low. The optimal opportunities would have been when the market ETF made swing low. But buying opportunities may still be there. We'll look at them, but you may be extra cautious because it has gone up for a few days. Just like SPY. DIA. DIA is now moving inside a triangle pattern. The relative performance line is tilting down, showing it is underperforming the market. So I'm not going to look for new buy setups in DIA, or probably not look for buy setups in industrial stocks. And lastly, Russell 2000 ETF IWM. It has excellent trend line support. In weekly, in the daily, it is moving sideways. The sideways range is quite wide, just like the India market. When the instrument is moving sideways and it has a wide range, where are the buying opportunities? At the lower edge of the range. Where are the profit booking or shorting opportunities? At the higher edge of the range. Where is price now? Right in the middle of the sideways range. That is not a place to take low risk swing trades. If you have already taken trades at the swing low, you might have booked partial profit already and you may continue to hold the remaining position with trailing stop. Now you may not want to initiate new trades in IWM. Overall, if we combine the weekly and daily charts, all the market ETFs are looking bullish. Last week itself, I mentioned it was bullish and it was probably going to make new all-time high in SPY. That came true. This week, I'm continuing with the bullish view based on the market ETF study. I have not looked at the other angles yet. Let's do that now. Let's now look at the sectors. For the sector rotation, I am using Q Edge. Before looking at the sectors, let's look at the bucket analysis. The 10 buckets 1 to 10, they are price ranges for all the stocks in S&P 1500. Their normal price range based on standard deviation. The normal range is divided into 10 equidistant buckets. The lowest bucket of the normal range being 1, highest bucket being in the highest bucket in the range being 10. And there is one more bucket beyond 10 on the upper side greater than 10, and another bucket at the lowest 10 below the normal range. This bar chart plots the overall distribution of the S&P 1500 stocks across these buckets, showing whether as a whole the stocks are overvalued or undervalued or they are balanced. When they are overvalued, the percentage of stocks in the greater than 10 bucket is very high, 30% or even more. And when it is oversold, the percentage of stocks in the lowest bracket less than 10 is also very high, 30% or more. Now it is balanced. There are not many stocks in the uppermost bucket, not many stocks in the lowermost buckets. Most of the stocks are falling, in fact falling in the middle of the range. That is a balanced picture. If we look at the actual percentage, we can see the percentage of stocks above the midpoint of the bucket range, that is 63%. So it is slightly more bullish than bearish. One day earlier, 48% stocks were above the midpoint of the bucket range. From 48%, it jumped to 63% in one day. So it turned from a neutral picture to a bullish picture on the last trading day. Is it overvalued? Certainly no, because the percentage of stocks in the extended bucket is very small, 5.6%. It will be overbought when the percentage reaches about 30% or more. That has not happened. So bucket analysis is saying that price has more way to go up. What is the sector picture? For that, I first look at the very useful 1 month to 1 day sector advance decline, industry advance decline, and stock advance decline graphs. This is now back to bullish picture across all the periods. 10-day period is less bullish than the other periods, but still it is more bullish than bearish. 1 month period has been bullish for a long time. I think only for one day it turned little bit bearish and then back to bullish again. And the other periods, last trading day, last 2 trading days, last 5 trading days, all are very bullish. Only 10 trading days, this period, less bullish, but we have to say based on this objective data that the market is bullish. There is no other way of putting it. The strength is across all sectors, or at least 90% of the sectors, across most of the industries, across most of the stocks. Bullish market indeed. Now let's look at the technical breadth. We looked at market ETFs, we looked at bucket analysis, distribution of stocks across their normal range buckets, and we looked at sectors all are bullish. And if we look at the technical breadth, first looking at the weekly period, balance between bearish and bullish, Q technical signals, that is also bullish. If we look at all signals, 74% bullish, strength signals 83% bullish, trend continuation 68%, and trend reversal 79%. Across all the categories, the weekly period is bullish. What about last trading day, Thursday? Even more bullish. This is the same Q finder, balance between bears and bullish signals, bears and bulls balance. All signals 89% bullish, Strength signals 88%, trend continuation 93%, reversal signal 76%. All the categories are bullish again. So far, every angle we looked at is bullish. The last angle to look at is using the internals. Let's first look at how the mega caps are doing using the mega cap custom index. It was inside a range bound by resistance memory trend line, support memory trend line. On Thursday, the last trading day of the week, price broke out of the range. In the weekly chart, it has excellent support from memory trend line. Looking at that support, you could start to buy some of the mega cap stocks at this point. You could, but would you? No, you wouldn't if you were using Q technique. Why? Because though mega caps came to a swing low in the daily, though mega caps came to trendline support in weekly, it was not the most efficient instrument to take long trades. Why? Because the relative performance is coming down. Overall, it is underperforming the market. There would be other stocks to buy, more attractive buying opportunities when mega caps made this swing low. So mega caps would also profit somewhat, but Q technique, we are going to take the most suitable instrument for taking long trades or short trades both, and for a long time mega caps are not the optimal buying instruments because it is underperforming the market, shown by the relative performance line tilting down. It is continuing to move sideways. There is no scope of buying or shorting, not the most efficient buying instrument right now. Now let's just look at the market breadth total view. To save time, I am not looking at the individual weekly, daily breadth inside. This is a market breadth view combining two composite indices, Nasdaq, NYSE, and the four major indices, S&P 1500, S&P 500, Nasdaq 100, and Dow Jones Industrials. We are looking at several things. The first three line charts are about how the stocks are moving relative to major moving averages. The one that is most responsive is the yellow line, that is the percentage of stocks above 50 MA. Earlier it was tilting downward. It remained below the average line, white line, and this week it decisively broke above the average line, and it also created higher low and you may say higher high also. So percentage of stocks above 50 MA in aggregate for the two composites and the four major indices, now it is back in an uptrend. The next time responsive indicator is the percentage of stocks above 200 MA. That also rolled over below the average line earlier, and now that line also has broken above the average line, and you can say it is creating lower, sorry, not lower, higher low and higher high. So the percentage of stocks above 200 MA in aggregate for the six indices is also uptrending. That is also bullish. The third plot, percentage of stocks where 50 MA above 200 MA, that is the slowest one. It is still rolling over. It was the last to come below the average line, and it will be the last to go back above the average line. That is expected. That is not the line to use to time the market. We would rather use the yellow line, and then if the market continues to go up, the white line will also turn up. Currently both of the white and yellow lines have turned up. These two internals are also bullish enough for us to look for only buying opportunities. And then we look at the distribution accumulation days or weeks plotted on the bar chart. Earlier I mentioned that there was a distribution day here, count of 1. But historical analysis has shown that no major drop has ever happened, at least to the extent I studied, without a distribution count of at least 2 on this market breadth total view. So there was a distribution day here and many people were bearish, but because the count didn't exceed or equal to, I was not overly concerned. Then came an accumulation day of 1. After that, market was moving sideways in some way. For some stocks it came down, but overall for the total view there was no distribution count at all. There was no reason to be extra bearish. There was no bearish signal, in fact. If at all, the last count is accumulation count, and that market breadth total view angle also proved accurate. Instead of coming down, the market went up and made a new all-time high. At the right edge, there is no distribution count at all. So that angle is also bullish. So we looked at the market from various angles. The global market angle, we can say it is mixed because several of the global markets are moving sideways now, which were bullish earlier. Other than the global market angle, everything else is bullish. Market ETFs for the USA market, they are all bullish. The bucket analysis is showing there is enough room for price to go up further. Sector level is bullish, industry level is bullish. Mega caps also broke out, though not the most optimal instrument to buy now. And the market internals seen from MA calculations, how the prices are moving in aggregate relative to major moving averages, that is bullish. Even total view market breadth is also bullish. Every angle is bullish. In this market, I would prefer to buy, and Q traders would also prefer to buy stocks only, not short stocks. And I shared certain buying ideas. It's useful to go back and look at them and see how I analyzed them at the point I shared and how did they work out. The point is not to show that all trades are working. The point is to demonstrate a disciplined technique of finding buying and shorting opportunities, a technique that makes sense. Why does it make sense? Because in Q techniques we are going to buy stocks only when it has fundamental strength, low risk technical buy point, and industry strength as well. I regularly share such ideas on my Twitter page and on my website sagarnandi.com. On sagarnandi.com, my ideas are under this category, Q360-degree trade ideas and techniques. Let's look at some of the latest ideas I shared. All the ideas I tend to share before knowing the result. The last one that I shared was on MGI. I shared it 2 days ago. That was the last trading day of the week, 1st April. Was it 1st April? Sometimes the dates I mix up because I'm in a different time zone. Yes, 1st April. I can see that from the snapshot of QH. Let's look at all the real-time snapshots that I shared. This is how I looked at MGI, the ticker symbol MGI, using Q Elite, sonar or TradeStation radar. What did I see? It opened up with a gap 1.4%. After opening with a gap up, it went up further. At the time of I posted the snapshot, it went up further by 7.6%. Therefore, from previous day's close, it was up by 9% in a day. That is a significant up move. And it gave a pullback buy setup. You can see because the pullback column was lit up and because the color is green, that is bullish. So it was a pullback buy setup. And the direction column that uses the two direction lines, slow and standard direction lines, that showed that it was in a confirmed uptrend. Price was above both the direction lines. And that is also a requirement for a pullback buy setup. You could identify MGI using Q Elite, that is Trace Station Radar, in real time. Then I looked at the stocks industry, MGI's industry, data processing and outsourced services. That was weak earlier over multiple periods. Right when I shared it, that was 1st April, 11:30 2 a.m. Eastern Standard Time, New York time. You could see the relative score of the industry was strong, much stronger than earlier. Some people like to look at the score also, but I just look at the color. When the color turned to cyan from magenta, that showed that relatively this industry was pretty strong compared to other industries. And the pace column was showing that right on that day, using real-time analysis, it was accelerating very fast. How fast? You could decide that from the color. If it is so cyan, clear cyan, it is very much accelerating. If you look at the score, that is 141 out of 147 industries, that showed it was one of the most accelerating industries on Thursday. Industry allowed us to buy, and I looked at MGI's fundamentals using Q Vital. Undervalued stock shown by the cyan color in valuation. Again, I don't look at the score. Cyan color means it is undervalued, and it has huge earnings growth in the last quarter, 1100%. In the previous quarter, it had 633% earnings growth. Prior to that, it had minus 91%. So it is a turnaround candidate with rapidly accelerating and currently very high earnings growth. It has a short squeeze potential also. In itself, the industry was very strong. Earlier, we saw relatively it was accelerating very fast and became very strong on Thursday. And in itself, you can see from here 86% of the 77 peer stocks were up on Thursday. So the industry was in itself very bullish. Relatively also it was very bullish. Then I shared the technical chart. The weekly had excellent support from trend line, automatically drawn smart trend line, memory trend line. The backdrop color was bullish, shape was bullish. Everything about the weekly chart was bullish. In the daily, it came to the watermark level here, created a double bottom, displayed a bull release signal. Prior to that, displayed an indecision at the bottom candle. Then it was going up. It had bullish flow one day earlier, and right when I shared it, it regained the yellow direction line. White direction line was already below that. That's why when I shared it, it gave a pullback buy setup. What is the pullback setup? It comes in a stock that is in an uptrend, which then pulls back and then regains both the direction lines, yellow and white. So it gave a pullback buy setup. If you were watching the stock using Q Radar or Q Finder, you could also buy the stock on this day itself. That would be a bounce kind of setup, using also the fact that it was right at weekly memory trendline support. Bounce setup is also a valid trade setup in Q technique, and pullback setup is also a valid trade setup. Which one takes is a matter of personal choice. I like to take both because both give attractive reward risk ratio. In this case, of course, the bounce setup had given lower risk trade. That is normal. Bounce setups always give the lowest risk trades because they are using trend line support. Right at the point of bouncing up from the support, we identify them using Q bind setup, Q bounce setup, which can be found from Q finder on Metastock or radar on TradeStation. That's an exhaustion based setup, bounce setup. Those are the lowest risk trades. Next is headwind setup. Those are also kind of extreme reversal trades, followed by box setup, again a reversal setup at double bottom or double top, and then comes the go with flow trend following and then pullback setup. They come at different stages of a stock's price movement. All are valid setups but meant for different stages. This is giving a pullback setup when I shared it. How did it close? I wouldn't know how it would close. I shared it at around 11:30 a.m. To confirm a setup, we have to look at the chart at the end of the day. Let's look at the stock MGI, how it closed. It closed even higher, 11.4% gain for the day. When I shared it, it had about 9% gain. So after I shared it, it went up further. You could buy the stock at different points. At the close of this day, using box come bounce setup, you could even look for buying it using the bullish flow the next day or pullback setup on Thursday. The weekly is looking bullish, daily is looking bullish. So there is a pullback setup, valid pullback setup on Thursday. Let's look at few more ideas I shared. Another idea that I shared was on Vivo. Again, I shared it on Thursday, the last trading day of the week, and around the same time, 11:13 a.m. New York time, 1st April. Vivo's industry, healthcare supplies, was clearly strong. Just by looking at the color coding, we could know the industry was strong and the pace column was showing it was accelerating as well. Earlier, it was one of the weaker industries. It was rapidly gaining strength and accelerating. You could read that from QH in real time. Then I looked at the stock's fundamentals using Vital. Once again, I found a stock that is undervalued. Valuation score is in sand color with earnings growth. These are star candidates in Q technique for buying. This again had a short squeeze potential. Oh, sorry, here I made a mistake. What's the post about? MGI, but by mistake I attached the fundamental analysis of SSRM. Sorry about that. Let's look at the stocks fundamentals. Did I mistake it? Yes. The technical charts I attached for Vivo, but fundamentals by mistake I attached SSRM. We'll look at SSRM also, but let's do a real-time fundamental analysis of Vivo using Q Vital. I'm using Vivo as root stock. Obviously, the fundamental would be strong. That's why I shared it. It's retrieving data from Refinitiv. It has already found 74 peers. Now doing scorecard analysis of the peer stocks, and yes, excellent valuation, undervalued, very high earnings growth, 550% in the last quarter. It's a turnaround candidate also because in the previous quarter it had minus 23% earnings growth, negative earnings growth. From there it turned up to 550% earnings growth. Over the last 3 yearly periods, earnings growth had been positive and steadily going up. Revenue growth for the last 3 quarters as well as years also positive. Has a short squeeze potential, great earnings quality. I am reading everything from the color coding, and 64% of the peer stocks were up when I share as of close. Now I'm using live system. So as of Thursday's close, which is the last trading day again, 64% of the 74 peer stocks for Vivo were up. So the industry was up, fundamental was very strong, and when I shared it, let's see how the chart looked like. This is how it looked like when I shared it. In the weekly, very nicely it came to trendline support and went up. If you were using the bounce setup, you would have bought using the daily weekly chart right at this point on one of these days, when it also displayed the bullish indecision at the bottom indicator. It was going up from trendline support in weekly, daily both. Again a bounce setup with very minimal risk, and price went up from there. Near the right edge, it came inside a triangle pattern, and when I shared it, it decisively broke out. One day earlier, it tried to break out of the trendline resistance but closed below the trendline resistance. So on Wednesday, at the close, we would not buy. Fundamentals would be strong, industry might be strong, but looking at the technical chart, we wouldn't buy. We could buy on Thursday right near the open using fine-tune chart, real-time fine-tune chart, 5-minute interval, or you could see how it closed on Thursday. When I shared it, it was looking bullish on weekly, daily both, but we would wait for the day's close. Just before close we could buy, or we could buy near the open. If you didn't buy at the open, you would wait for the close. How did it close? Let's see if it confirmed the breakout setup. V4. No. It did close higher, certainly higher than previous day's close, higher by 7.8%. However, it closed with a long upper tail. The Q technique says that don't buy a stock at the close if it has such a big upper tail. May wait for next day and use fine-tune chart, or if you already took the trade near the open, using the fact that it was also a gap up move, that trade would have been in profit at the close and you could hold on to that. In fact, if I go to Sonar and drop Vivo symbol there, it did confirm a breakout setup with high volume. It is at pendulum or price extreme high in a confirmed uptrend above both yellow and white direction lines. It's also above upper boundary now. That is fine. It is giving a valid breakout setup because the breakout is associated with high volume or activity. However, at the close of the day, a Q trader would not buy it because of the long upper tail. One could buy it at the open. How? At the open, one could use the fine-tune chart, and when it came above the early range high, one could take a long position right here for the day, putting stop just below early range low. Then price went up, but it pulled back and closed slightly above early range high. This was not a day trade. If it was a day trade, one could try to book profit at the top, but I'm explaining more from a swing trading perspective. If one identified the buying opportunity earlier based on fundamental strength, industry strength, and observed that Wednesday it closed just below trendline resistance, on Thursday morning he or she could watch the stock and right when it broke above early range high, it could be bought, and in that case one could continue to hold the trade at the close of Thursday. But if you didn't take the trade using early range breakout technique in the morning session, Q technique suggests not to take the trade at the close of the day. If you didn't buy it already near the open, you may observe how it does on Monday. If price continues to go up using fine tune chart, one may still take a long position. Now by mistake I attached the snapshot of SSRM in Vivo Post. Let's look at SSRM. Now why SSRM? It's a gold mining stock, and I talked about this stock, I think if not in the forum, in the Q Skype chat. Yes, I didn't share it in my forum, but I shared it in the Q Skype chat. And before looking at SSRM, the gold mining stock, I in fact looked at GLD. In the weekly chart, GLD was coming near the trend line support, very long term trend line support, and it also was bouncing up from the watermark support. In the daily, it created a double bottom and went up with a bull release signal. That was on Wednesday. That was the time when I looked for gold mining stocks. On Wednesday, GLD closed just below trendline resistance. In any case, using real-time analysis, on Wednesday, I looked for strong gold mining stocks. Now, how was gold mining industry? Let's find that out from QH. Let's start with sectors. We go to the sector rotation table. Look at the material sector. You can see material sector is not the strongest sector right now. It was very strong earlier, but on Wednesday and Thursday, the score is in magenta color, so it is not the strongest. However, as I say, the sector is too broad. To identify rotation, we may drill down and look at the industries. So let me drill down into the materials industries, sort by 1-day performance, and you can see those many, or you may say most of the materials industries are not strong. Gold is very strong both on Thursday, Wednesday, and even over 5-day period. Earlier, how was gold mining? Very poor. This one score shows it was the worst performing. Worst performing of all the industries that we track in QH. From there, it came close to being the best performer. That is a clear turnaround. And I always like to buy turnarounds, be it in terms of industry rotation or fundamental strength in terms of earnings growth. And of course, the Q trade setups are all buying swing lows. They are kind of turnaround candidates. So gold mining industry was strong on Thursday itself. That's why the 2-day period, 1-day period, Thursday, Wednesday, both were strong. So on Wednesday, I started looking at the gold mining stocks. I could try to find out stocks that are star candidates. What are star candidates? Where they are undervalued with earnings growth. Now in QH here, I am only looking at S&P 1500 stocks. In that I have Newmont Mining and RGLD, NEM and RGLD. Both of them have very high earnings growth for 3 quarters in a row. NEM is also medium valued, RGLD is overvalued, but I want to look at all the gold mining stocks, not just the S&P 1500 constituents. So what I'm going to do, I am putting my cursor anywhere on any of these 2 rows and click this peer analysis button. that will do a peer analysis of Newmont Mining, for example, and while doing so, it will retrieve all the industry peer stocks from Refinitiv, not limited to S&P 1500. First, it is retrieving some basic data of Newmont Mining, some description of the company, what it does. As you can see, the EPS is positive, the company is making money, has a decent dividend of 3.5%. It has retrieved 13 gold mining stocks. On Thursday, 92% of those stocks were up. This is medium valued with earnings growth. We already know that. That is for Newmont Mining. But my aim is to look for a peer stock that may be stronger. So these are all the peer stocks. I am going to use the combo smart filters. The 3-star looks for stocks that are undervalued plus having earnings growth. First I try 3-star. If I don't find anything, I may find 1-star candidates, that is either earnings growth or undervalued. First I try to look for 3-star candidates, and SSRM was the only stock there. That is how I reached SSRM. First I saw some strength in GLD, the commodity, gold ETF. Then I checked gold mining industry, that was strong. I saw 2 stocks in S&P 1500. I carried out a peer analysis to look at all the gold mining stocks in real time and found only 1 stock, SSRM, that was undervalued with high earnings growth, high revenue growth as well. It has a short squeeze potential as well. Then I looked at its charts. Let's look at SSRM charts. And remember, I was looking at it on Wednesday itself. On Wednesday, we saw GLD closed below trendline resistance, and SSRM on Wednesday also closed below trendline resistance. So I shared about the stock on Q Skype group, saying that if gold goes up from here, then SSRM may also break out of the 2 trendline resistances, and indeed that came true. On Thursday, it went up by a significant percentage, 7.1%. Again, I could identify the buying opportunity right near the swing low. Right near the swing low. Let's use green color. Right near the swing low. However, you could wait for a breakout to happen. Now, I was anticipating a breakout on Thursday, so if you were doing that, you could again use the fine-tune chart to take a long position in anticipation on Thursday itself. Let's look at the fine-tune chart. So we were already bullish on SSRM based on fundamental strength of the stock, on the industry rotation strength, and also the fact gold commodity itself was going up. We were ready to buy, but on Wednesday we might not have bought because it was below trendline resistance. We would be ready on Thursday, right when it broke above the early range high. One could buy it somewhere here. For the day, put stop just below early range low. The stop was never approached. In fact, price didn't even go below early range high. It continued to go higher. If it was a day trade, one could book a nice profit at the close of the day. But again, I'm focusing more on swing trading. One would continue to hold the trade overnight. This is how one could use fine-tune chart for a precision entry of a swing trade. And see the volume that came in the stock in the last couple of bars, 1 2 3 4 5 6 5-minute bars. So last 30 minutes saw higher and higher buying for 30 minutes in a row. That was heavy buying and very bullish close of the stock. Again, I could use Q analysis to buy a fundamentally strong stock right at the swing low, using 360 degrees analysis. There are probably many other buying opportunities. However, again, if we look at SPY, what I mentioned earlier, the best individual stock buying opportunities would have come near the swing low of SPY. SPY has already gone up somewhat. So now are you going to buy? Am I going to buy? I am going to buy, but in industries that were weak earlier and now strengthening, like gold mining. I wouldn't buy in industries that were already starting to go up along with SPY from here, already up for 1, 2, 3, 4, 5, 6 days in a row. They may not give low risk buy setups, but industries like gold mining would give. And you could find them out using Q technique, just as I demonstrated today, and I will continue to share such ideas on my forum as well as on my Twitter page. We are at the 1 hour point. Let me end today's session here. If I am not traveling again, then I'll have next session on Wednesday, 8 a.m. Eastern Standard Time. I look forward to seeing you there. In any case, whether Wednesday or next weekend, whenever I have the session, I tend to share the timing on Twitter. And if you are subscribing to the YouTube channel Trading Profitably, you'd be notified from YouTube as well. Thanks once again for joining me. As I always say, no reason not to do so. Trade profitably and see you again.